Napoleon didn't just fight wars. He built a system that turned conquest into a powerful financial engine. Across Europe, hundreds of thousands of soldiers moved with precision, reshaping borders and political power. Kingdoms surrendered, treaties were signed, and entire governments fell under French dominance. That behind battlefield victories was a strategy: make Europe pay for its own defeat. Welcome to the Stateside Vault, where money, power, and history reveal the real story behind events. At his peak, Napoleon controlled territory stretching across most of continental Europe.
His Grande Armée mobilized over 600,000 soldiers, unprecedented for its time.
Feeding, equipping, and moving such a force required enormous and constant resources.
But when Napoleon took power, France itself was financially exhausted.
Years of war had buried the monarchy under massive debt and interest payments.
Revolutionary leaders printed paper money backed by confiscated church lands. Overprinting destroyed confidence. Inflation surged, and the currency quickly collapsed.
Napoleon understood one thing clearly: war cannot survive monetary chaos.
In 1800, he created the Bank of France to restore financial stability.
He introduced a metallic currency tied to gold and silver to rebuild trust.
Tax collection was centralized, corruption reduced, and government finances tightened.
Inside France, early budgets were disciplined and surprisingly stable.
But Napoleon had a different plan to fund war: send the bill abroad. After victories, defeated nations were forced to pay massive indemnities. Satellite states contributed soldiers, money, and resources to sustain expansion.
Each victory generated resources, and those resources funded the next campaign.
As long as expansion continued, the financial system kept working.
But the model had a weakness. It depended on constant growth.
Napoleon also imposed forced loans on cities and governments under French control. He then launched the Continental System to economically isolate Britain. But smuggling spread rapidly, and European economies suffered from trade disruption. Russia eventually broke the system, triggering a disastrous confrontation. In 1812, Napoleon invaded Russia with the largest army Europe had ever seen. The campaign collapsed under distance, weather, and catastrophic losses. Only a fraction returned, and the financial losses were enormous.
There was no victory, no indemnity, only cost, debt, and weakened power.
As defeats mounted, external funding disappeared, and pressure moved back to France.
Meanwhile, Britain financed war through trusted public debt and strong institutions.
Its credit system proved slower, but far more sustainable. After Napoleon fell, France itself was forced to pay massive reparations. The wars reshaped Europe, proving institutional finance outlasts military dominance.
The deeper lesson still applies.
Power depends on sustainable financing and credibility.
Systems built on constant expansion look strong until growth suddenly stops. Empires don't fall when battles are lost. They fall when the financial engine fails.